Hey everybody, welcome back to Actual Investing. Today we have a very highly recommended stock for me to cover, and that is Celsius Holdings, ticker CELH. So this is a super popular stock online. I've seen plenty of YouTubers talking about it. I see it getting passed around a lot on stock twits. So there must be something here that is getting everybody's attention. So we're going to look at the stock, look at the company, and find out what I think of Celsius. So this is Celsius's website. And what they do is they make a healthy energy drink. So here they say they use healthier ingredients such as ginger, green tea, vitamins, and their drinks contain no sugar. So if you're on a diet, maybe Celsius is the type of thing that you drink before or after exercising. It also says that it has no high fructose corn syrup, no artificial colors or flavors. It does say it has no aspartame, but it does contain sucralose, which is another artificial sweetener. So I don't want to say that that's misleading, but it is true it has no aspartame, but it does still have artificial sweeteners. So I just like to get out of the way that I personally don't like these drinks. I just, for whatever reason, I can't drink anything with artificial sweeteners. It's like the first thing I taste, and I just like my good old-fashioned sugar. So call me unhealthy, but I like my drinks to have sugar, and so I personally am not a fan of the taste of Celsius drinks. However, I'm going to put that aside and analyze this company because the stock really has been growing like a weed. The company seems to be doing very well right now, so we're going to look into the brand, and I'm going to put my own personal biases aside because that's what one should do when analyzing investment. You really do need to take yourself out of it and look at an investment objectively. So Celsius is priced pretty reasonably, so I found this on Amazon. It looks like Celsius, if you want to get a 12-pack, it's about $19 right now on Amazon for a variety pack. I'm sure prices are different depending on where you go, but that equates to about $1.50 for a 12-ounce can. So to me, this isn't necessarily a premium priced product. I think anyone who wants to drink Celsius can reasonably access it. And one thing I really like is the business model of selling drinks. People are always going to spend money on a nice drink, especially a healthy drink. So that's been the craze lately. I don't know if you're familiar with drinks like Olipop, which is sort of the healthy probiotic soda, or kombucha has been huge lately where I am. So I think healthy drinks is the space to be if you're looking for growth. And the nice thing is with drinks is that you just have automatic recurring revenues built in. So if somebody buys a Celsius drink, tries it, and thinks, oh man, this is great, they're just going to keep buying it. There's not going to be a reason to not drink it because it's consumable. You drink one, okay, I'm going to need to buy some more Celsius this week. Oh, hey, let's do an automatic purchase of Celsius for the month because I know I'm going to drink them this month as I'm working out. So the business model of selling drinks is just such a good business model because people will keep coming back. It's just something that people just love, a nice drink, especially after they work out and they need to replenish those vitamins and nutrients into their body that they lost while working out. So I think Celsius is in a very attractive market of selling drinks. And that's also one of the reasons why I like Starbucks. Starbucks is kind of hurting right now, but still, I like the business model of selling drinks. So speaking of selling drinks, I think we need to talk about this partnership that Celsius has with Pepsico. So this is old news. This came out in 2022, but essentially PepsiCo and Celsius have a long-term strategic distribution arrangement. So what that means is that Celsius received an investment from PepsiCo. So Pepsi made a $550 million investment in Celsius via convertible preferred stock, which I don't know why they wouldn't just purchase common shares. Maybe there's regulatory issues there. I would have to look into it. Regardless, it's still an investment into Celsius, which helped Celsius gain access to PepsiCo's distribution network. So that's huge. So besides Coke, I would say PepsiCo probably has the best distribution network, at least in the United States, and probably internationally as well. So PepsiCo and Celsius partnering up is huge. And I know this is old news, but you can really, really see how this, one, helped to strengthen Celsius's balance sheet, and two, helped to fuel their revenue growth. So let's first look at their balance sheet. So this is their most recent Form 10-K on their website. Side note, their investor relations page is a little weird. I don't like how it's laid out. It's laid out differently from pretty much any other stock I've ever analyzed. It took me a while to find just basic things on their investor relations page. So if you're the type of person who doesn't like to, fool around with that kind of thing, that might be a red flag for you. To me, I don't care. It was just something worth noting. So anyway, this is their most recent balance sheet, and you can see that this is just a really strong balance sheet. Up here they have, and sorry, but it's a little bit blurry. That's not my screen. That's just how it kind of is on their page. Let me see if I can zoom in a bit. They have cash and equivalents of $756 million, and then they only have total liabilities of $448 million. So they can handily pay off all their debt if they wanted to and still have cash left over. If you know me, you know that's something that I like to see in a company. So a very strong balance sheet, for one, helps to fuel growth because you can grow by acquisition. You can dump more money into the business without having to eat in too much of your profits. Cash is just a very flexible thing to have. So if a company has a lot of cash and not too much debt, it just gives them options. It gives them flexibility to do what they need to do to grow the business. So that's why I think it's so important to look for a company with a healthy balance sheet like Celsius. The other thing that I mentioned with the Pepsico partnership is it fueled growth. So this is their most recent earnings press release. And just look at, in 2022, August of 2022, was when that PepsiCo partnership was announced. And then look at that, all in 2023, just this massive spike in growth because they were able to take advantage of PepsiCo's distribution network. And now the thing that is really helping, I think, is that they're very visible in stores. So if you go to Target or if you go to a Walmart, there will actually be a cooler, a Celsius branded cooler of just Celsius drinks by the checkout. That is huge. Do you know how many people are walking up to the checkout and, oh, I'm a little thirsty after my grocery trip. Let me just grab a drink. And if there's a cooler full of Celsius, they're going to say, oh, this looks good. They've got all these different flavors. Let me try one. And I think that's just been huge for Celsius. So this PepsiCo partnership is definitely nothing to scoff at. This is big news. It's old news, but it's been big for Celsius. We can see this huge, massive spike in growth. Okay, so this all was the bull thesis. Now let's think about the bear case for a little bit. So if you're investing in a company, you always want to pay a bit more attention to the bear case. And here's why. It's very easy to find the bull case for a stock. Pretty much any stock you want to invest in, if you go to their investor relations page, the company is going to tell you the bull case. They're going to say, we are the leading provider in X, or we are poised to benefit from growth in the growing AI industry. You know, a company is going to tell you the bull case. It's not going to be hard to find. The bear case, however, is going to be a little bit more difficult. You're going to have to really dig into it because the company doesn't want to tell you the bear case. They want you to invest. And B, a lot of people don't like to talk about the bear case on YouTube because a lot of times people will watch videos like this to find out reasons why they should buy the stock. And they don't really always want to hear why they shouldn't buy the stock. But I think that's so important. If you're about to invest in something, you want to scrutinize it very carefully because the worst thing to happen would be to invest in something. It goes down 30%. You say, why is it going down? And then you discover the bear case after it's too late, right? So I only say that because a lot of people don't like to look at the bear case. I love looking at the bear case. I would so much rather see all the dirty laundry before I invest as opposed to after I invest because spoiler alert, every company is going to have some bad news. No company out there is perfect. So, all right, with that little disclaimer out of the way, let's look at the bear case. So I think one thing to note is their profitability. So growth and profitability are kind of a counterbalance, right? So when you want to invest more in growth, you're not going to be as profitable. And then when you take the foot off the gas and focus more on profitability, you're not going to grow as much. One of the reasons for that is an expense called selling, general, and administrative, which shows up on the income statement. So let's look here at Celsius. They're selling, general, and administrative. They're spending in the trailing 12 months about $400 million on, this is essentially advertising, staffing, everything that the company needs to sell the product. So typically with a company that's growing quickly, they're going to have to spend more on SG&A. So if we look at their profit margins, we can see that they're not quite as strong as some peers. So let's just take a look at that. So we see, let's just look at the most recent quarter. So this was the December 2023 quarter. Technically, they have announced their first quarter 2024. It's just not in Google Finance yet. So that's fine. We'll look at December. We see a net profit margin of about 14%, which is quite respectable, actually, for a business that is selling drinks. However, if we look at a peer like Monster, this is Monster's income statement, they have a net profit margin of about 23%. So it's much higher. However, before you yell at me, it comes with a trade-off. So Monster's revenue growth is about 12% year over year, whereas Celsius's revenue growth, if we go back to their press release, is 37% year over year. So Celsius has about triple the revenue growth that Monster has. So I think you can actually look past the low profit margins because we know that they are spending money on growth, on advertising to help bolster that 37% amazing year-over-year revenue growth that Monster just doesn't have anymore. Monster is growing quite slowly these days. So one bear case, not as profitable as their peers, but we explained the reason for that. They're investing back in the business. I think another bear case that we need to think about is the future. So what is Celsius going to do going forward? This 37% revenue growth that they're seeing year over year cannot last forever. So I talk a lot about on this channel about how growth has to stall at some point or at least slow down. You can't have amazing double-digit revenue growth forever. You're just going to run out of customers, or you're going to have to keep pricing your product higher and people aren't going to buy it. At a certain point, you hit a brick wall and you can't keep growing your revenues like that. So what does the future look like for Celsius? Because let's go to my spreadsheet really quickly. This is my spreadsheet where I rate stocks on 4 factors. Those factors are margins, total revenues, price to annualized sales, which is valuation, and year-over-year revenue growth. So Celsius right now scores quite well in my spreadsheet. It's actually about average, but it's quite good. I only pick good companies to put on the spreadsheet in the first place, so that's good that they're average. They're average for good, right? So one thing that's really helping them out on my spreadsheet where I score these stocks is their strong year-over-year revenue growth. Otherwise, their valuation is a little steep. If they didn't have this revenue growth, 14 times sales for a drink company, that's expensive. So I think we need to think about their future. When this growth slows down, they're going to be a steeply priced energy drink company with slowing growth. And I just don't think that's the type of thing that investors are going to be looking for. I think most investors right now are invested in Celsius for the double-digit revenue growth alongside profitability. And I think as soon as that starts to slow down, investors are going to get a little spooked and start heading for the exits. I'm not saying that is guaranteed to happen. I'm just saying if you look at peers, let's look back at Monster again. So they have annual revenue of about $7 billion, and they're a $57 billion company. So that's less than 10 times annualized sales, whereas Celsius here has 14 times annualized sales. So are they going to start to look overvalued when revenue growth slows? I think yes. However, the flip side of that coin is if they can keep growing that revenue, that valuation is going to go down over time because the more they grow, the lower that price to annualized sales number will be. So I think 2 bear cases. Profitability, are they going to have to keep spending on advertising? And valuation, are people going to want to keep buying an energy drink company at 14 times annualized sales? To me, I'm not entirely sure. So I'm on the sidelines of Celsius, but I don't think it's necessarily a bad investment. It does score decently well on my spreadsheet. They have strong gross margins, which have actually been improving from about 48% to 51%, which I believe should remain high for the near future. One thing to think about is aluminum prices. Are aluminum prices going to impact Celsius because they sell most of their drinks in an aluminum can? So if aluminum prices go up, Celsius is going to have to eat that or pass it on to the customer. But for now, gross margins are good. Even though we talked about the SG&A being a big expense for Celsius, it's still only 57% of their gross margins, and they don't spend anything on R&D currently. So it is still a business that's going to continue to be profitable. They do have over $1 billion in annualized revenue, so they've captured a good chunk of market share, and like I said, are still growing quite rapidly at 37% year over year. So am I bearish on Celsius? Am I bullish? I don't know. To me, it's not something I would personally invest in, especially as I do own Starbucks as one of my largest positions as a dividend stock as opposed to a growth stock. But to me, Celsius, it's tough because I don't like the drinks, so I have to try to put that aside, which is fine. And I'm a little bit nervous about their future when their growth slows and about some of the external things that may impact their business that they can't control, such as aluminum prices. And the final thing I want to mention is Celsius's moat. So I also am curious what kind of moat Celsius has besides the PepsiCo partnership. So when they stop being quite so trendy, maybe there is another drink that comes up that starts to steal Celsius's market share. Obviously, not every drink is going to have a partnership with PepsiCo, but what if Coke makes a competing product to Celsius? I think there's a lot of risks associated with Celsius, especially at 14 times annualized sales. So like I said, I'll be staying on the sidelines for this one. But what do you guys think? Can you tell me maybe why you like Celsius as an investment and why you're invested in it? I'd love to read some other opinions in the comments below. Thank you so much for watching the video. Please like it if you found this useful. Please dislike it if you didn't and tell me why. I love to hear feedback of any kind. And thank you so much for watching. I hope you have an awesome day.